Hey guys, welcome to my first ever monthly market update. These videos are going to be a bit longer because I'm going to be talking about our usual numbers and other factors that affect the economy and real estate. With that being said, when I do these videos, I'm going to be comparing the previous month to the month before that. So in this case, January 23 to December 22. So let's get right into it. We saw over 2,000 new homes hit the market last month. That's to be expected with a lot of sellers waiting until after the holidays are over. Next, pending sales also jumped up, this time by 22%, seeing almost 1,900 homes go under contract. And closed sales actually saw a decrease down to 1,300 homes. Now this was also to be expected because a home takes anywhere from 30 to 45 days to close, and we didn't see that much activity in November and December, which explains why we saw a decrease in homes sold. Now, average sold price stayed roughly the same, only going down by 1%, and total inventory saw a decrease by 12.5%, hitting 3,444 homes for sale. And lastly, interest rates, the only thing that we like to see go down, hit a sub 6% for the month of January. So speaking of interest rates, the next thing I want to talk about is the Federal Open Market Committee, also known as the Fed. So they're a committee within the Federal Reserve System that oversees open market conditions. So the Fed just ended their first meeting of the year on February 1st, and they made the decision to raise interest rates by 25 basis points. A basis point is equivalent to 0.01%, and the reason we use basis points is because if I told you that interest rates rose by 0.25%, that could be taken one of two ways. So it's also important to note that the Fed doesn't set your interest rate. What they're doing is they're affecting the federal funds rate. Essentially what that is, it's what a bank can charge another bank for borrowing money. So when the federal funds rate goes up, your interest rate also goes up. So with that being said, this is the lowest rate hike we've seen since they started raising interest rates in 2022, which is why if you've been following the stock market, you've seen a growth in most of your positions. No one knows what the Fed is going to do in their meetings, but most investors and analysts are looking at their next meeting in March and predicting that we could see one more rate hike by 25 basis points or no rate hike at all. But we'll just have to wait and see. So moving on to unemployment, this has been big news. If you haven't heard yet, it's at the lowest it's been since 1969. So overall unemployment is sitting at 3.4%. So low unemployment is overall a good thing for the economy. We see more people having jobs, circulating money, paying taxes. But one thing to keep in mind is that we typically see higher inflation with low unemployment. But we won't have the CPI numbers until the middle of this month, where I'll make a new video going over that as well. So with that being said, if you have any questions, concerns, or if you think I should elaborate on anything I said in this video, feel free to reach out, give me suggestions. I'm always looking to improve. And with that being said, you guys enjoy the rest of your day.